The main contributors to the profitability is that we finally reached the scale in our non-lending businesses that they are now profitable. And so we have three profitable segments. When I joined the company 6 years ago, we were primarily a lender. That's a very profitable business for us. We've entered the technology platform services business where we enable 140 million accounts throughout the United States and LATAM to do payment processing as well as core banking technologies and a number of other financial services technologies that we use at SoFi, but we also sell to others.
SoFi Technologies, a digital financial services company, has been a focal point for investors looking for the next big thing in the fintech industry. With its stock price fluctuating wildly over the past few years, many are wondering if SoFi could be a millionaire maker. Today, we'll dissect some key information into SoFi's current market position, its growth potential, and whether it could be a lucrative long-term investment. A brief overview of SoFi Technologies. SoFi, short for social finance, started as a platform focused on student loan refinancing, but has since expanded into a full-fledged digital bank. The company offers a wide range of financial products, including personal loans, home loans, investment services, and banking products like checking and savings accounts. SoFi's goal is to be a one-stop shop for all financial needs, leveraging technology to offer services that traditional banks provide, but with the convenience of a digital platform. Strong customer approval. One of SoFi's most significant strengths lies in its customer satisfaction. The company boasts high ratings on platforms like the Apple App Store, reflecting its strong approval among users. Customers appreciate the seamless experience that SoFi provides through its app, which integrates banking, investing, loans, and financial education all in one place. This digital-first approach has allowed SoFi to rapidly grow its customer base, appealing particularly to younger demographics who are more inclined to use mobile and online banking services. Potential for sustained growth. SoFi's rapid customer base growth has sparked discussions about its sustainability. While it might be unrealistic to expect the company to maintain a 40% annual growth rate indefinitely, there is still substantial room for expansion. The US market alone consists of nearly 300 million adults and countless small businesses, many of which have yet to fully transition to digital banking. SoFi's comprehensive product offerings and effective market communication position it well to continue attracting new users, even if growth slows to a more modest double-digit rate. Customer engagement and cross-selling opportunities. One of the critical factors that could drive SoFi's revenue growth is its ability to cross-sell its diverse range of financial products. Currently, the average SoFi user utilizes fewer than 2 products offered by the company. This statistic highlights a significant opportunity for SoFi to increase customer engagement by encouraging users to adopt more services. For instance, a customer who initially joins SoFi for a personal loan might later choose to open a checking account, start investing through SoFi's platform, or refinance their mortgage. The potential for cross-selling is vast, and successfully tapping into this could substantially boost SoFi's revenue. SoFi's appeal to younger demographics is another critical advantage. Millennials and Gen Z are set to inherit significant wealth as it transitions from older generations, and their banking preferences are expected to shape the future of financial services. Unlike older generations, younger consumers are more comfortable with digital-only banking solutions, which plays directly into SoFi's strengths. As these demographics grow in financial power, SoFi could see a substantial increase in deposits and an expanded customer base, valuation, and market position. When considering whether SoFi could be a millionaire maker, it's essential to look at its valuation. SoFi's stock has been through ups and downs, but its current valuation is seen as more reasonable, especially compared to larger, more established banks. Traditional banks may have the advantage of history and trust, but SoFi's innovative approach and growth potential offer a compelling alternative. For investors, this adjustment in valuation could present an opportunity to buy into a high-growth company at a more attractive price point. SoFi's management has expressed optimism about the company's future, particularly in terms of growth in book value. Management expects an increase of $800 million to $1 billion in book value this year, which could be an appealing prospect for investors. This anticipated growth reflects confidence in the company's ability to continue expanding its services and improving its financial performance, despite recent challenges in the stock market. Struggles with stock performance. Despite these positive indicators, SoFi's stock has struggled in the market. After seeing substantial growth in 2023, SoFi's stock value has dropped significantly in 2024, trading over 70% below its peak. This decline is partly due to concerns over SoFi's large personal loan portfolio and related charge-offs. While the company has posted 3 consecutive profitable quarters, the market has remained skeptical, leading to a sharp decline in stock price. SoFi's business strategy has evolved over time, particularly following the pandemic. Initially focused on student loan refinancing, SoFi pivoted towards personal lending after the federal student loan moratorium was implemented. This shift allowed the company to continue growing, but it also introduced new risks. Personal loans are generally considered riskier than student loans, especially in times of economic uncertainty. This increased exposure to personal loans has made some investors wary, contributing to the stock's recent underperformance. Credit quality concerns. Another concern for investors is the quality of SoFi's loan portfolio. The company's annualized net charge-off ratio has increased, signaling potential issues with loan repayments. However, there has been some improvement in the performance of newer loan vintages, thanks to SoFi tightening its lending standards. This suggests that while the company faces challenges with its older loans, its current lending practices may be more robust. Revenue growth and projections. Despite the struggles with its loan portfolio, SoFi has seen significant revenue growth. The financial services and tech platform segments have been particularly strong, driving substantial increases in revenue. SoFi has also raised its full-year revenue and net income forecasts, indicating that the company expects continued growth despite the economic headwinds. For investors considering SoFi, the key question is whether the stock's potential upside justifies the risks. SoFi's business model is innovative, and the company has shown impressive growth in both its user base and revenue. However, the stock has been highly volatile, and the concerns around its loan portfolio and economic conditions add a layer of risk. That said, SoFi's current valuation might make it an attractive investment for those willing to accept the potential for short-term volatility. The company is trading at a lower multiple than many of its fintech peers, which could offer a favorable entry point for long-term investors. If SoFi can continue to grow its customer base, cross-sell its products, and manage its loan portfolio effectively, there is significant upside potential. Rebounding and financial resilience. One positive development for SoFi is the recent rebound in its student loan business. With the end of the student loan moratorium, SoFi has seen a significant increase in student loan originations, which were up 86% year over year. This resurgence could help diversify SoFi's revenue streams and reduce its reliance on the riskier personal loan segment. It's also worth noting that SoFi's typical personal loan customer has a strong financial profile, with an average income of $168,000 and a FICO score of 757. This suggests that, despite the higher risks associated with personal loans, SoFi's customers are relatively financially resilient. This could help mitigate some of the risks related to loan defaults, particularly if the economy faces further challenges. Market position and competitive risks. While SoFi has built a broad array of financial products and continues to innovate, it faces increasing competition from both traditional banks and other fintech companies. The financial services industry is highly competitive, and any loss of market share could impact SoFi's growth prospects. However, SoFi's early mover advantage in the digital banking space and its ability to offer a comprehensive suite of services could help it maintain its competitive edge. Is SoFi stock a millionaire maker? So, is SoFi stock a millionaire maker? The answer depends on your investment horizon and risk tolerance. SoFi offers a unique value proposition in the fintech space with strong customer approval, significant growth potential, and a broad range of financial products. However, the stock's recent performance and the risks associated with its loan portfolio and economic conditions suggest that it's not without challenges. For investors with a long-term perspective and a high tolerance for risk, SoFi could indeed be a millionaire maker. The company's innovative approach to banking and its potential for sustained growth make it a compelling investment opportunity. However, it's important to be aware of the risks and to consider how SoFi fits into your overall investment strategy. In the end, SoFi represents a high-risk, high-reward opportunity. If the company can continue to grow and manage its risks effectively, early investors could see substantial returns. But as with any investment, it's crucial to do your homework, understand the risks, and invest accordingly.